Hey, there's Jim Hiles. It's Market Monday. It's the 8th of November, and fall is looking great here in the Northeast. I actually went to a pro football game yesterday at Giant Stadium. It was a great game and great day out in the sun, actually. So we enjoyed fall. Hope you're doing the same. So we're looking at November the 8th today, and we got 5 in a row. So we are on a little run here between the markets cruising. I think I would call this a melt up, where people are seemingly afraid of all kinds of things, but the market keeps going higher anyway. We're seeing NASDAQ growth stocks now, start to kick in. Small caps are kicking in, which is something we really wanted to see. This shows there's a broader participation in the stock market. We want the small companies to get going. That means people are, willing to take risk and willing to make investments in small companies, which tend to be more volatile over time. The Fed is going to taper, whether they finally came out and said that, and that seemingly is fine with the markets. The bonds have actually done better from a appreciation and depreciation standpoint, value standpoint, as rates came down a little bit, surprisingly. So you got to wonder what that's about. Is it something that people are looking to do to get out of the stock market? Because we've had a huge issue in terms of earnings. We see earnings surprises are now expectations are 81% beat. That is good, meaning the analysts have been lower maybe than the actual. And that typically helps the stock market going into the fourth quarter. Seasonality is in our favor. Generally, the fourth quarter into January is a good time of year to invest. Growth is beating value. And yes, we are having an inflationary surge. Nothing new here. Dow's back up to 20% and others are over that. If you look at the fear greed index, when I look at this thing just to kind of get a sense of it in terms of the emotions in the market, we're at 85% greed. What does that mean? 85 is the number, not a percent really. It means that people are getting into the market, and those small caps, that participation I said before is good, but it's also driving kind of the overbought scenario. You might see a pullback, I guess, is the long and short of this, because it has been cruising here for a little bit. I wouldn't be surprised if it takes a little breather. I can't tell you when, where, and how, but it just feels that way based on our experience. We are still risk on, long-term investors. You're in it, man. Stay in it, stay fully allocated. And from an overweighting standpoint, we are overweight stocks versus bonds, as we continue to be. There are different places you can go to find opportunities. One of those I mentioned before was small cap. We do have a small and mid cap sleeve that we do. And you can see what's going on here. The small and mids have actually lagged the rest of the market. And this fund is in the same position. This fund is looking at financial services, healthcare, and industrials primarily. So these are what we might call cyclical stocks, could be reopening trades, risk on type trades. And this is where we think there's an opportunity today. So if you want to talk about how to get more into small caps, happy to do that. In the meantime, good week. We'll stick with it and talk to you next week. Thanks.